A recent article in the Wall Street Journal says that many Americans are bailing on their home insurance. Some homeowners are skipping coverage because they no longer can afford the rising premiums. Homeowners in the United States are increasingly opting out of their home insurance. They're taking the chance that they'll be able to financially survive a major disaster. And many homeowners believe that the risk doesn't justify the high cost of insurance. Some people who have canceled their policy claim that they're doing so because the monthly premiums are just too expensive and they just can't pay them. The national average for home insurance, based on $250,000 in dwelling coverage, increased this year to $1,428 annually. That's up 20% from 2022. But it's not just those who are struggling financially who are bailing on their insurance. Some wealthy homeowners believe that they have enough money saved up to rebuild or relocate whenever their homes are destroyed. Now, dropping homeowners insurance is risky business. When you don't have insurance and your home is destroyed by a fire, you don't just lose your house and its contents, you might also have to pay for removing your home's remains as well as the costs to rebuild it. Financial advisors warn that few people can financially survive the destruction of an uninsured home, and it's particularly precarious considering the high price to rebuild or buy a home in many areas of the country. Noah Damsky is a financial advisor in Los Angeles, California. He says, "It's a risky proposition to go without home insurance, and you need to fully understand the financial consequences if you do lose your home." A standard insurance policy typically covers the cost of replacement of the home and some of its contents in the event of damage or theft. Most mortgage lenders require borrowers to have home insurance, so those skipping on a policy often own their homes outright. Amy Bach is the executive director of United Policyholders. That's a national nonprofit insurance consumer advocacy group. And she says that in the past 3 years, more people who own their homes without a mortgage or who've inherited a home are opting to drop insurance because they can't afford or can't accept the current high price of home insurance. About 12% of homeowners in the U.S. don't purchase homeowners insurance, and about half of them have annual household incomes of less than $40,000. That's according to a 2023 survey by the Insurance Information Institute. Now, if a homeowner has a mortgage and doesn't purchase insurance, the lender will typically buy lender-placed insurance for that property. That's according to David Sampson. He's the president and chief executive officer of the American Property Casualty Insurance Association. Lender-placed insurance is generally more expensive than the coverage homeowners would buy for themselves. The higher cost of policies is a blow to both existing and hopeful home buyers. Some borrowers are delinquent on mortgage payments and are blaming their late or missed payments on unexpected increases in their insurance premiums. That's according to Rick Sharga, founder and CEO of C.J. Patrick. That's a real estate consulting firm. Compared with around 4 years ago, mortgage lenders are more focused on factoring in higher insurance costs when determining how much of a mortgage a borrower can qualify for. Sharga says this is particularly the case in areas that are experiencing more natural disasters, such as the states of California and Florida. The Wall Street Journal goes on to say that ultimately, this will bump some prospective buyers out of the housing market. They will either be unable to afford a home or won't qualify for a mortgage. Thanks for joining me today on Generation Jones. If you've liked the video, please give it a thumbs up and consider subscribing to the Generation Jones channel. Till we get together again in a couple of days, I hope you take good care of yourselves.